In today's video, I'm going to be breaking down your pay as a contractor, which is going to be a very, very important thing to look at. Now, the question that I want to ask you is, have you ever wondered what the taxes really mean when it comes to your pay as a contractor? It's a really important question to answer. And so in this video, I'm going to guide you through the difference between inside and outside IR35, and I'm going to show you a breakdown of the different types of pay. And of course, don't forget to like and subscribe as always. And for those of you who don't know who I am, my name is Michael Tabirade. I'm an independent management consultant and founder of the consultancy, The Mastery Group. Now let's talk about it. Inside IR35 and outside IR35. What the hell is this stuff? Now, really and truly, inside of IR35 is essentially saying that you are a person, an individual who is doing work that is very similar to somebody who works for a permanent place of work. So for example, so essentially what this really means is you can be replaced by somebody who works there permanently. Whereas if you're outside, what they're basically saying is that actually the work that you're doing is unique by nature. It requires a certain level of specialism or expertise, and you have a finite amount of time being there. And so they tax you differently. The difference is when it comes to the inside approach, the focus is on taxing you as if you were an employee. And this is why you are taxed PAYE taxes. Okay, so pay as you earn. Pay as you earn is just basically the way and the system used by the government to tax things automatically. Okay, so this would include things like income tax, national insurance, blah, 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 all this kind of stuff there. Whereas if you're working outside of IR35, then the thing to note here is that they're taxing you, but they're not really taxing you, they're taxing your limited company. As most outside of, IR35 contractors or consultants will be working for or under their limited company. That's the difference. And this is where it'd be corporation tax. And if you're purely dividends, i.e. you're recording the bank transfer and making sure you're accounting for taxes when you pay for it annually, maybe VAT quarterly as well, all of that's taken into consideration. So let's get into it in a bit more detail. So let's talk about inside IR35, okay, pay and taxes. Now, essentially, the thing to note here is that taxes are typically higher. They're higher, they just are, okay? So I can't give you a percentage. I could say, 40%, 45%, blah, 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 blah. But it's best to look at the numbers yourself. But the taxes are typically higher. Another thing to note is that essentially this is usually processed under another limited company, typically an umbrella. So they're known as an intermediary, okay? And essentially what they do is they process all of the payments and all of that kind of stuff there. The third thing to note is that usually you're paid at least 2 to 4 weeks in arrears, and this is happening in terms of your payment after that on a weekly or even monthly basis. It really does depend on who is your umbrella company or the client that you're working with in terms of when they can pay the umbrella to then pay you. So let's look at this, okay? This is a big ass table, and I'm going to be referring to this stuff. You may see me at the bottom, so I'm here. Okay, cool. So what I've got here is an inside IR35 pay and taxes table that I put together. So there are 1, 2, 3, 4, 5, 6, 7 different rows. And you'll see that there are 2 different bits that I want to talk about. So the first bit is referring to what is applicable to the actual contractor or consultant. The second bit, the second table, which is on the next page for those listening, is referring to what is paid by the client, i.e. the organization that is taking you on. This is specific for inside of IR35, not outside. So let's get into it. And so when we look at the contributions of the person, we have a day rate example of £500. Again, this is included in the gross amount. So this is the gross amount, and this is the amount that is advertised on the place where you actually found the specific role that you're looking for. This is a day rate typically, okay? Especially if you're inside of IR35. So £500 is the typical example that I keep on using. The next row, you have taxable gross pay, okay? So this includes holiday pay. What's the difference between the day rate of £500 and the taxable gross pay? Well, in this instance, taxable gross pay does not include the umbrella fee. So for those of you who are not versed with this, an umbrella who is processing your payments has a specific fee they may charge you on a weekly basis, okay? So this fee may be £18 every week taken out of your £500 in order for them to process payments. So let's say if it's £20 a week, then 500 minus 20 is £480. The taxable gross pay is £480. And of course, they look at this whole taxable stuff, typically at least anyway, on a weekly basis. Now, of course, this taxable amount is subject to PAYE. And for what I said before, this includes income tax, national insurance contributions, etc., etc. This is automatic deductions, and this is the way the government tax you specifically, okay? Next, in the next row, we have income tax, which is part of the PAYE that I spoke about before. Again, this is not paid by the client. This is paid by the contractor, the same thing as the taxable gross pay, but this comes from that. And of course, this is included in the gross amount. Again, they take this into consideration on a weekly basis. And thresholds for this currently are 20%, 40%, and 45%. So this is all based on the income tax allowance. So again, the initial income tax allowance, which is free, is £12,570. This is from memory. And then they start charging 20% for the amount made above £12,570 up to roughly £50,000. And then after £50,000, it's going to, I think it's up to from £50,000 to £125,000 is 40%. And then above that, it's 45%. I think it's £125,000, but check gov.uk for more information. It may even be £100,000, but I'm not entirely sure, but check that for yourself. But the point being made is there are different thresholds that are in play. And the next row, you have employee national insurance. This is also part of PAYE. This is not paid by the client, so the organization. This is obviously paid by the contractor and included in the gross amount, and it's also weekly. So something to note is that contractors pay, I think, 12% up to thresholds and 2% beyond that. So essentially, what is national insurance contributions from an employee standpoint and also an employer standpoint? This contributes to, again, helping people when it comes to unexpected events. So this comes down to things like maternity leave or paternity leave or whatever it may be, all these different things that we pay for just in case something happens. So it's the government's form of insurance to help you, to protect you. Then we have in the next row, pension contributions at 5%. Again, this is not paid by the client, this is paid by you, and it's optional. You can opt out of the pension if you want to. Of course, there are self-invested private pensions if you want to get involved in that stuff. But again, these contributions will vary by nature. You also have student loans, and that depends on when you actually went to uni. So there's pre-2012 and there's post-2012, and they have different thresholds and all that kind of stuff there. Again, this is not paid by the client, this is paid by you, the contractor. This is included in the gross amount as part of PAYE, and this is done on a weekly basis. Again, for those of you that don't know, if you are a contractor, of course, they take all of this stuff into consideration on a weekly basis. And if you're paying student loan, you're paying it weekly as opposed to monthly, which means you speed up your payments. So when I first started contracting, I paid off my student loan within the first year and a half. I was amazed because I wasn't doing it on purpose. So that could be quite useful as well. Then you've got the umbrella fee that I spoke about. I used the example of £20, but in this example, for those of you who are watching it, it's £18 that I use, but this could vary. Okay, so this is not paid by the client. This is paid by the contractor, automatically taken out of the pay, but not part of PAYE, and it's not included in the gross amount. So it's taken out. So again, if you get paid £500 a day, take off the £18, then quick maths, that's £482. £500 that you're left in terms of what is taxable. Of course, this is varied based on the type of umbrella that you're part of. So that was everything in relation to the contractor, what they contribute, what they see on their payslip. The next thing to consider is the client. So there are three things to consider here. So there's employer's national insurance. So this is going up from 13.8% to 15% as of April 2025. So of course, this is not paid by the client. This is paid by the contractor. This is not included in the gross amount, and this is weekly. Okay. The next thing is apprenticeship levy, which is 0.5%. This is not paid by the client, but is paid. This is paid by the client, sorry, but not by the contractor, and it's not included in the gross amount. So when it says not included by the gross amount, this means it's paid on top of the £500 a day. That's what that specifically means. Okay. So again, apprenticeship levy is to try to encourage organizations to get members of staff to do apprenticeships or do trainings or educations, which is quite interesting because this is not applicable specific to contractors, so to speak. So again, where is this money actually going towards? Anyway, it all contributes towards this stuff. Okay. Now, when it comes to employee pensions contributions, of course, the client or the organization is obviously making contributions towards that as well. Okay, so this is all important stuff to bear in mind. Now, when we sort of like move it on, in terms of the logical order, this is deducted first based on what is not involved in a gross pay, which is the umbrella fee. Then it's the employer taxes, which are calculated, and then it's the employee ones as well. Sorry, I've written this in a really weird way, but the point being made is the umbrella's taken off first, and then anything to do with the employer taxes and the employee taxes, they're calculated in sequential order after that. So hopefully that makes sense. Hopefully I haven't confused you guys too much. So let's look at a working example here. So day rate, £500 a day. Once the umbrella is paid, umbrella fee is paid, so to speak, of £20 we're using in this specific example, you have £480 left. So after employee national insurance contributions are paid at 15%, assuming this is post April 2025, you would add 15% on the taxable gross, which is £480. And you would remove that from the £480. You've got £408 left. So the formula for this would be £480 minus 72. Why 72? Because 15% of £480 is £72. You take that off and you've got £408. Then you've got pension contributions at 3%. So of course, you've got what's remaining, which is £408. So £408 times by 3%, which will equal £12.24. £408 minus £12.24 gives you £395.76. Please note, whether I'm doing these calculations right or not are subject to the fact that I'm doing these deductions based on the remaining amount. I'm doing it sequentially. I don't know if accountants have a different way of doing this. I'm not an accountant. I'm not qualified. Don't follow me. I'm just giving you my working example, so to speak. Okay. Anyway, if there are any accountants, you can validate whether this is right or wrong. And if it's wrong, well, you can get the rough workings out and go to that accountant who can give you the proper calculations. But everyone's going to do it slightly differently, is my understanding at least anyway, but they should be doing it to a certain standard. So we're not including taxable. Well, we're including taxable gross pay here because we've taken off all of the employer stuff or the hiring manager stuff or the client stuff. Now we're moving into the employee stuff. So income tax at 20%, depending on the threshold. Of course, this would be slightly different depending on how much money is being made. So we've got £395.76. Where did we get that from? Well, we had £408 remaining from the employer NICs that were taken off, the national insurance contributions, and we minused the pension contributions of 3%, which was £12.24, which gave us £395.76. So £390, £95.76 minus 20% of that is going to be £395.76 minus minus £37.94. Sorry, £79.15, which gives you £316.61. Then we've got national insurance contributions at 12%. So we do £316.61 minus 12% of that, which gives you £360.60 minus £37.94, which gives you a remaining of £278.22. And then employee pension contributions at 5%. So you've got £278.22 minus 5% of that, which gives you £278.22 minus £13.91, which gives you £264.31. That was a lot. And I only did that for those who are listening. You're probably thinking, oh my gosh, that's what that £500 gives me. And you know what I did? I did do a calculation to basically see what that looks like in terms of a working week. And it's about right. I'm not going to lie to you. It's about right. It's a bit crazy. You know, you're roughly going to be making $1,300 a week. Some people may be like, that's a lot of money. But I mean, from that £500, a lot of money's been taken off. So bear all of this stuff in mind. Now, before I move on, I want to ask you a question. Does it matter to you if you are inside IR35 or outside of IR35? Please let me know your thoughts below. And of course, for those of you who are interested in, again, becoming an independent consultant or at least building a portfolio with somebody who has that mindset, then please complete the form below and let's see how we can work together within this space. So now I want to talk to you outside IR35 pay and taxes. So again, when it comes to outside of IR35, the taxes are typically lower because it's corporation tax mainly. And then of course you've got business expenses, which offsets a lot of the taxes, etc., etc. So again, it's not something that is heavy when it comes to the outside space. Now, looking at it, payments are processed through your limited company with the help and support from an accountant. I want to make this abundantly clear. It's important to make sure that you have an accountant. Payments are made via an invoice and can be regular depending on the setup. And typically there is some sort of proposal that is done in order to hold you to account for your deliverables. So again, I've got an example that we can utilize here as well. So we have a salaried version and we have a dividends version. I probably should have put dividends on here. So let's go through the same thing again, same process. So £500 a day. This is paid by the client, obviously. There are nothing's paid by the contractor in this sort of instance, and it's included in the gross amount. Of course, the frequency is daily per project because, of course, as an outside IR35 contractor, there is an agreed daily rate that you have. Now, there are obviously business expenses to think about. So let's say, for example, your business expenses are £120 a month. You take that into consideration. Is this paid by the client? No. Is this paid by the contractor? Yes, because you've got things to pay for, like maybe Microsoft 365 or Canva or Toggle or Otter AI, all these different things that are taken into consideration. Is this included in the gross amount? No. Obviously, the business expenses vary. Of course, you can offset this stuff. You can take off the business expenses from the amount that you're paid to lower your taxes, so to speak. Now, when we're looking at things like corporation taxes, is anywhere between 19 to 25%. And when it comes to this stuff, tax on profits, okay, so minus business expenses under 50K is 19%. So if you make 50K, it's 19% in terms of what you contribute towards corporation tax. And then anything from 250K onwards, it's 25%. Now, no offense, but not many of you are going to be making 250 plus K. So what happens between the 50K profits that you make to 250K? Well, there's something known as marginal relief, where there's this calculation that basically gradually gets you up from 19% to 25%, depending on how much you get paid. So bear that in mind. Then you have VAT. Okay, so value added tax, I think it stands for. And so essentially, you know, if you're making, I think, a minimum of £90,000, it makes sense to register for VAT. And you can charge this to the client if anything, put on top of your day rate as an example. Okay, so think about all of this stuff there. And of course you can claim VAT on things that you've purchased when it comes to your business expenses. So key tip, make sure that you are tracking all of your business expenses, because you said that to your accountant, they'll do their whiz and calculations and see what's applicable or not. And it's going to help you from a tax perspective. And this is why you can get tax efficiencies. The room that I'm in, I can obviously save money in terms of tax. The laptop that I've bought, I can save money in terms of tax. Transport to specific places in relation to my contract, I can save money on tax. So again, all things to think about. Then you've got dividend tax. Okay, so I want to talk about dividends. So the whole dividend tax thing is interesting because the allowance for it. So when I talk about an allowance, it means you're not taxed on this amount initially. The allowance of it have changed from £3,000, I think, to £2,000 to £1,000 to now £500 from the 1st of April. They're going to do away with it. I'm sure they're probably going to. It basically means from now up until April, I believe you'll get taxed 8.75% after your first £1,000. The first £1,000 is free. From April onwards, your first £500 is free. Okay, it's tax free. So really important to bear this in mind. And so with that, anything over £50,270, you'll be taxed 33.75%. And anything above that, I think over £125 and £125,000 and 140 pence, you'll be taxed 39.35%. So remember, it's done based on thresholds. And so dividends is the way to go. All a dividend is that you are noting or recording a bank transfer when taxes have been deducted or accounted for. It's a bank transfer. They talk about dividends, this and that. Let your accountant know. Record this in some very specific way. The way I do it is I have a spreadsheet. I share this information with my accountant. I don't take anything out of my account unless I let my accountant know. They've got a software that's connected to my Tide account, so I use Tide Banking, which tracks all of this information. So I make sure I'm within the threshold, and I make sure that I don't take more than 65% out of my account at a time based on what I'm paid. So all of this stuff comes in handy. Accountancy fees, this may vary. Let's say it's £100 every single month. This is not paid by the client, this is paid by the contractor. This is not included in the gross amount. This is monthly or annual. Okay, so again, like I said all the time, it's one of the best investments that you can make as a contractor or consultant. So that was dividends. Let me talk about salary. Okay, so what I will say is, why would you be salaried in the first place as a consultant or contractor? There are benefits that come being salaried, which means that you contribute to PAYE, national insurance contributions, and income tax, which means that you get the insurances such as paternity leave, sick leave, blah, 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 that any other paid member of staff would get as a permanent member of staff. Of course, your contribution towards public services through income tax, again, is noted. And it means you're applicable for state pension and all this kind of stuff there. That's why you would do that stuff. It would make more sense to do it, especially if you're taking on employees and all that kind of stuff there. But for most of you, you're probably going to do dividends. So I won't worry too much about it, but I'm just putting it here as an example. So here, salary is, it says not paid by the client and essentially paid by the contractor. But what I mean here is that it's paid via the limited company using your accountant to help you do this stuff. So bear that in mind. It's not part of the gross amount. This is done on a monthly basis. Income tax, again, this is taken out, not paid by the client, but paid by the contractor. And it's not part of the gross amount. Again, this is done on a monthly basis. This specific line, so row 3, should be employee national insurance contributions. Okay, and obviously this is if a salary is taken out. Now, the point being made is this is part of the gross amount, whereas the employer's one, which is the 4th line, which I'm going to talk about, is not part of the gross amount. This is on top. Okay, so employer national insurance contributions, not paid by the client, paid by the contractor, and it's not part of the gross amount. This is monthly as well. Same things apply when it comes to what I spoke about before. And then there's pension contributions, which is if obviously you're salaried, it's not paid by the client, paid by the contractor, and included in gross amounts. And of course, this is optional. That was a lot. So let's look at a working example. So working example, let's say you get paid £10,000 on a monthly basis. That is assuming that you've worked 20 days and essentially you're getting paid £500 a day. Your business expenses may be £120 a month based on how things are set up. So you do £10,000 minus £120, which equals £9,880. Then you've got corporation tax at 25%. We're assuming this, by the way. It could be 19%. It could be anything between 19 and 25%. But for the ease of the calculation, I'm going to use that. So we do £9,880 minus 25% of that, which gives you £7,410. And then, because we're using a dividend example, not a salaried example, because it's more applicable to those who are watching this, again, the dividends available. Okay, what we want to do is essentially make sure that we're in a situation where we are dividing the tax-free amount by 12, because we're assuming that, you know, we're working 20 days every single month, so to speak, and we want to divide that amount. This is not going to be a pure science. Okay, this is rough workings out. I want to bear that in mind because it's not as perfect as this. Okay, so let's bear this in mind. So we do £7,410 minus £41.66, which is £500 divided by 12. £500 comes from the tax-free allowance that we get from the 1st of April 2025. I think it's the 6th of April, but anyway. So once we have this figure of £7,368.33, we want to apply the dividend tax of 8.75% on top of that amount. And so we've got £7,368.33 minus £644.73, which leaves us with £6,723.60. Of course, we want to take off the accountancy fee of roughly £100, let's say as an example, and we're left with £6,623.60. Interesting stuff. So now we want to ask ourselves a very, very important question. What makes more? Which one specifically makes more? Now we have to make some assumptions. Assuming that the inside IR35 contractor works 20 days and gets a pay of £264.31 a day once you removed all of the taxes, okay, you've removed all of the deductibles, basically the previous example, and assuming that the outside IR35 contractor is also doing 20 days and gets paid by dividends and not salary, the total is as follows. So the inside IR35 contractor is making £5,286.20, and this is basically timesing that previous amount of £264.31 by 20. And the outside of IR35 contractor is making £6,723.60. So that's a difference of £1,437.20. Is this an exact science? No, but I want to give you some sort of feeling towards what this may look like. Go and speak to an accountant who can give you proper sums and proper breakdowns, etc., etc. But I want you to get an idea at least. Okay, I've done the best that I can as a non-accountant. Don't copy me or follow me for accounting advice. I'm just sharing my experience. I don't know why I said it like that, but there was a lot of passion behind what I just said. So where we getting to with this stuff? Essentially, I want you to highlight or understand that an inside IR35 contractor is treated as an employee for tax purposes. And of course, there are PAYE deductibles to take into consideration. With an outside IR35 contractor, they're treated as a business. And so there are corporation tax and there are things that can offset some of this tax, such as business expenses, etc., etc. Take-home pay is usually higher outside for IR35. Outside IR35, due to tax efficiency things such as dividends, etc., etc., versus PAYE. And of course, when it comes to business expenses, it's limited for inside IR35, while for outside IR35, it allows you to have more deductibles, which makes you more tax efficient. But one thing to note is that when it comes to the administrative stuff for outside of IR35, there's a higher administrative burden. It's more complex, and this is why you need to get an accountant. Once we know all of this stuff, once we've brought all of this stuff in mind, it's important to recognize that if you want to work with me, let's work together. Okay, let's work together. If you're somebody who wants a competitive edge within the business or career environment and wants to boost their portfolio career, let's work together. Okay, I love working with individuals who are wanting to do more, have more, and be more in their life. And again, if you like this video and want to see more videos centered around portfolio careers, leadership, consulting, contracting, all of this kind of stuff, then don't forget to subscribe and hit the notification bell. And as always, my friends, understand, reach, and expand. Peace.